Righto, money miners. Jesus, I'm a bit hoarse. Had a few tins last night. Watched New South Wales get their fucking ass kicked, and I hate the world.
When it's going that way, Matty, do you get progressively more disengaged with the game, or do you have like a rule you have to watch?
Nah, well, when we score, I usually kick the barbecue in excitement, and when they score, I kick the fucking barbecue in anger and try not to hurt any kids around me. So, anyway, right, boys.
It's like your mate on the jumbo yesterday.
Dharma.
Yeah, Dharma. Just always coming out with a bloody bug arm from banging the chair all day.
And he hates the new jumbos because there's nothing to punch in front of him. He's got to punch the seat.
It's an emotional job.
Shout out, Dharma. He's bloody GC, isn't he?
Yeah, he's a good
I love giving you a bit of underground in your life.
I love it too.
Right, today, boys. Mid-res, they've bloody sold a bit of the haul road.
They have.
They fucking finally happened. Stock's down too.
Stock's down. Yeah, I think it's a story, but it's a story we've known is going to happen forever. I think the real story, mate, is what does the haul road unlock? And I want to go into the lay of the land of all of the, the stranded iron ore deposits in and around the area that might have an avenue to port as a result of this haul road.
Just rip straight in, I reckon. Let's just
what
go.
else we got, mate?
I've just made up a uranium segment.
Yep.
Because there's a bit happening.
Bit on Sheffield, bit on aluminium. Novonics, I think we're going to chat about as well.
Well, yeah, it's mostly ASIC I want to have a chat about.
ASIC.
Just deal leaks in general.
Deal leaks.
Yeah, let's do it.
You want to see what we're leaking? Sign up to the director's special, moneyandmine.com.
There you go.
If you're bloody mad, if you don't. Right, Minres. The haul road stake gone to bloody JP Morgan Infrastructure.
Morgan Stanley. But they both have Morgan in the name and both
and
investment.
JP Morgan advised Minres. So,
exactly.
Yeah,
it's just JP Morgan Stanley.
Yeah. If your name's Morgan, go work for Minres. You probably get a job. Taylor, give us the bloody spiel, boys. What the fuck's going on?
So Morgan Stanley Infrastructure Partners, they're picking up the 49% of MinRes's haul road for $1.3 billion. Total MinRes, they expect to bank $1.2 billion of that. After tax and sort of cash, $1.1 billion up front, and then $200 million is actually contingent on reaching 35 million tonne per annum run rate on the haul road from the deposits in any quarter before 30th of June 2026. Now, MinRes's guidance, I think, is for CY25 to be that 35 million tonne per annum, but obviously there's a contingent payment tied to it as well. What it means, though, is it implies there's this $2.7 billion valuation for 100% of that whole road on a transaction see-through basis. MinRes states that implied EBITDA multiple is 9.4 times EBITDA, assuming a nameplate capacity of 35 million tonnes per annum.
So, is there any interesting components about the transaction that have risen now that it's happened before? What you knew before?
Yeah, I think there's quite a few interesting parts of this one. It's something we've talked about a lot. Is the steel's going to happen? Blah 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 blah. But reading through the announcement, so MinRes they've in the deal they've capped the tolling volumes to 40 million tonnes per annum that come under that joint venture split arrangement. So that's really interesting to me because we know how thoughtful Chris Ellison and his team are when it comes to structuring deals and contracts and all that sort of stuff. So if they've kind of capped the economics at a certain threshold, the see-through to me is that they have an intention to go beyond that threshold, but they want to get 100% of the upside. I also think that like in the deal, Morgan Stanley, they've got a right of first refusal in some component. I don't quite get how the economics would work in that sense, but I read it also in Kate McCutcheon's note, but I've heard that they might have a right to match at some stage and for stuff above that 40 million tonnes per annum. But regardless, I think there's a bit of an indication from what we've seen in that structuring that there's an intention to use this whole road to bring on a lot more than is currently baked in, than is currently that 35 million tonnes per annum. Kate McCutcheon's note from Citi alludes to MinRes taking, talking a big game of 60 million tonnes per annum. And then, I've heard some people quote 80 million tonnes per annum, when it comes to where it's going in the long run. So pick either of those numbers, and that's way, way, way more than what they're, ramping up to with the initial sort of stage one, 35 million tonnes per annum. And Chris does talk a lot about these sort of stranded iron ore deposits, right? So I think that's the area I want to go is to talk about what can actually use the whole road, which is still under construction to the best of my knowledge. But, when it is finished, and underway and all that sort of stuff. Like, what does it unlock? What could go to it?
Far out. Good luck if you're a kangaroo on that road. Bloody, there's going to be some trucks flying everywhere. I think I talked about that with Leonora as well.
Yeah.
Bloody geese. Bloody kangaroos will be extinct with the amount of trucks going around soon.
There might be a fence around us.
Oh yeah, bloody hell. What? Okay. So what is in the area? What's bloody? Because off the top of my head, I can't bloody think of anything. But you know,
I've been doing. I've been pretty interested in this in the last couple of days. I've been doing some research on it because this is interesting. This is a bit of infrastructure that opens up a bit of WA. Like, you know, we're talking big money here as well. It's iron ore kind of numbers, right? So it's worth paying attention to, I think. So let's start with the tenements that MinRes has their hands on from the Onslow JV. This map that we'll put up on screen now, that points out the whole road that, you know, MinRes is putting online now. Plus the dark dots there are the 9 sort of stage 1 deposits as they're referred to. You can see that they have in a lighter shade there and dotted 3 other deposits there owned by the JV too. So assume that can come into the mix at some point. And look.
So who's the JV, Trav? Just to be clear.
Oh, it's these parties I haven't heard, but basically it's like everyone talks about Kensport, but all of these tenements came about came about because MinRes did this deal with Red Hill Iron. I mentioned them on Tuesday's episode. They've renamed Red Hill Minerals, but the ticker's still RHI. So they did this deal, which you know, Red Hill Iron got themselves 0.75% royalty plus a bunch of staged payments. In fact, there's a final stage payment as part of that deal that is payable upon first commercial shipment, which, you know, any day now. Sort of Red Hill Iron's expected to get their final sort of $200 million payment as a result of that deal done in 2021. And so I'm actually looking. So I thought it would be interesting to go into Red Hill Iron after mentioning it the other day. There's that 0.75%, you know, FOB royalty from all of the production from that tenements. There's some conditions and, you know, all that sort of stuff, but just simply think of it as 0.75% FOB royalty. Now, I looked at Red Hill Iron's history since doing the deal in 2021, and with these stage payments that they've had from MinRes in consideration, they've paid 5 special dividends already to shareholders of Red Hill Iron, so they're given money back via these fully franked dividends. Then you bake in the royalty, you bake in the $200 million that's going to come in the door soon, and, you know, you look at the royalty itself. If you just tried to like thumbsuck value that royalty, depending on what iron ore price you plug into it, that royalty, you know, is going to bring in between 30 and 40 million bucks a year. And on top of that, they actually, I'll bring up on this map, you can see that Red Hill still retain a few 100% owned iron ore deposits themselves. They've got this Whitegate has 15 million tonnes, Redgate 48 million tonnes. You know, they themselves might come into play in the future at some stage now that the whole road's there. So, I think
they own 100% of them?
Those ones they do own 100% of.
Wow, interesting.
Matty, just to fill you in on who the JV partners are, it is 60% MinRes owned. It is roughly 19% owned by Baowu, the Chinese group, and then AMCI about 11%, and POSCO the remaining 10-ish.
Right. Good work. Good bloody Google hustle there.
All over it, mate.
JD, have a look at and look. This is good. I like this map. This bloody clearly identifies where everything is. Probably, you know what I'd like to see on this map, Trav?
Tell me, Matty.
Have a look at this. Look at that.
It might look like that. I actually think it could. It actually probably already looks like that.
What we're looking at on YouTube, Money Miners, is the bloody locations where all the GetWet bladders should be.
Yeah.
This is what I want to see on maps because, like, you know, the whole thing about this Onslow Hall Road is like
Dustless.
These enclosed trucks to minimise the dust and
Dustless mine.
Mate, there's going to be. We want a dustless Onslow. We want a dustless Australia. Money Miners. You can't say go Australia if we're pissing dust everywhere.
That's it.
And these bloody GetWet bladders are going to fucking sort it out, mate. I reckon even the Fortescue and Yanitower roadhouses on this map should even have some small GetWet bladders to bloody make sure the shitters never run out of water. So step one, call Matt.hall's number that's in the show notes. Step 2, he will supply and install these GetWet bladders. And step 3, update your maps to look like this to show who's getting wet in the region and, more importantly, who needs to bloody get wet.
Mate, you couldn't have said it better myself.
Took the words out of my mouth, Matthew.
I am a visionary.
Yeah. Well done, Matthew.
Right, so who else we got in the region?
Well, let's just stick on Red Hill
RHI. So,
one more moment, right? So capped at 400 million, 200 million coming in the door any day. End of the quarter with $23 million cash. That royalty, like if you just bloody look at the see-through value and what the projected annual income of that royalty would be, that royalty's been valued like 5 times, right? For a royalty.
I know exactly where you're going with this.
Tell me.
You're going to mention Deterra.
Yeah, mate. No. I mean, like, it's just like even just the valuation in my mind for the see-through value of that royalty is kind of unfathomable.
Yeah.
And that's excluding the other deposits they've got. They retain some non-iron ore rights as well. And I mean, I just think like this company's on my list of like, it's in that value category of like worthy of further DD because it screens kind of like absurd from the pack, if you know what I mean. Now, Deterra should buy it, mate. MinRes should fucking also buy it because you can extinguish the royalty. Like, and imagine paying, bottom drawer to extinguish the royalty, and I just think it's.
Why haven't they?
I haven't looked at the register, so I mean, sometimes you just can't like get a deal done for any reasonable kind of premium because there's people on the register. The real question is why didn't MinRes just buy them to start with in order to get access to what they did was this asset transaction. They bought their interest in exchange for these things. So my guess is there's some complications with the register and shareholder in terms of doing a corporate deal, and that would probably explain things. But still, like, you've got special divvies being paid out and all that sort of stuff. It's an intriguing company. Let's move on to CZR Resources.
Just quickly, you can see top 20 shareholders own 90% of the company.
Yeah.
So there might be some challenges with
Jada, you're on.
that register.
You're with us live, minus. Jada, you're on fire today.
This is like Jamie on Joe Rogan just jumping in live with the facts.
There's some interesting groups on that register. We can get into that
later.
There? Well, you see China Baowu, who are the partner where the iron ore is going. AMCI, they're 6% shareholders as well. China Baowu were 16%.
Yep.
Perth Cap 35%. Need to look into who's behind that. And the Poly Group as well, who made a lot of money 10 or so years ago up in iron ore. They are 11% shareholders too.
There you go. Isn't that interesting?
Yeah.
Now, CZR Resources, I've grabbed this map. You can see here, the purple there is CZR's project in proximity to the MinRes haul road. So the haul road's in blue. Their tenure is in purple there. Their Robert Messer project has 45 million tonnes. And if you remember not that long ago in January, we talked about this deal where...
Is this a Creasy stock?
Yeah. There's this Chinese group, Miracle Iron, wanted to buy CZR's 85% interest in that project for $102 million. FIRB has held up approval for this, extending their decision from May 30 to the 30th of June already. So I guess we'll find out where that lands sometime soon, or it might just get delayed again. I don't know. But CZR trades at 27 cents today. But sale of this project itself implies 43 cents alone. So the market is baking in a strong chance of FIRB rejection. But there's 45 million tonnes that could feasibly potentially, go out to a ship via MinRes's haul road as well. Now, I want to talk about Red Hawk. So this company is a bit further east of the haul road, but it's not that far away. Like it's, they're capped at $177 million. And despite iron ore having a rocky 2024, this stock's up 50%. Their Blacksmith project is pretty advanced versus the others as well. Like they've put out a PFS about a month ago. I read that PFS and I thought it had some pretty tidy numbers despite the haulage route being 446 kilometres all the way to bloody Port Hedland. So that PFS had a 31% IRR doing 5 million tonnes per annum over a 23-year mine life, producing a total of 101 million tonnes life of mine. 60% of their cost, which was US $50 a tonne, is attributable to that giant haulage route I mentioned, right? Now, it could probably get to Onslow Port using the MinRes haul road plus a feeder for another, US for US $10 a tonne. So all in, their costs, can lower to US $30 a tonne rather than the $50 per tonne if they have the logistics solution, a bit more capex, etc. So, and then you look at their capex, it uses portable crusher, so it makes sense, right? And I even reckon it could make sense for Min to buy it at some point as opposed to just doing an infrastructure kind of arrangement, because there's 100 million tonnes in that life of mine production. Min could stick to 5 million tonnes or go higher if they wanted to mine it faster. don't know what the constraints are there, but Min get the mining services contract, clip it on that. The grade average is 60.5%. So yeah, I think that's one on the radar. That's part of that, those stranded deposits that could eventually come in via the Hall Road too.
So this Hall Road, like comparing it to what we consider a normal road that is just owned by the government, and you just drive onto it and off your merry way. I assume this MinRes Hall Road will have like distinct bloody entry points and like you can't drive on it unless you pay for it. Is this how it is?
Yes.
Effectively.
Yeah.
It's a private road.
It's a private road and you got to you go through the bloody boom gate and send it.
Yeah, and it's, autonomous trucking is the selling point that MinRes have put forward as well. So
it's what's the eventually like when it, what's the time difference between all these different trucks if it got to 80 million tonnes per annum or whatever? It's like truck. It's something crazy like that, anyway.
Yeah, got to give
just
enough
bung
time,
train tracks on the
enough
road.
time for an echidna to walk across the road.
Tomorrow we're going to do a bit of a spectacular with Armit, but I think you can't talk about the stranded iron ore deposits without talking about one of the spec stocks that's up and about.
I was wondering whether you'd mention these guys.
Yeah. So look, and when I talked about Red Hill Iron on Tuesday's podcast, mate, there were comments on YouTube, there were bloody comments on Twitter everywhere. You missed macro metals, M4M, bro. You missed macro metals, like it's on the whole road, bro. So let's quickly fucking talk about that, all right? What a tremendously promoted stock. 4.4 billion shares fully diluted, which is, a $140 million market cap at the moment. And for the life of me, I don't actually know what they have. I don't know if they know what they have. This is a long, long, long way off. This is far lesser, developed than the things I've talked about beforehand. They've got 6 exploration licenses, which they only paid $54,000 for and a 2% royalty for. 3 were applied for in 2023. The other 3 apparently after the announcement date itself. Here's Chucky's comment on the matter, and let's leave it at that. Chuck goes, Chuck's Weekend Wheel of Fortune, which of the following emerging companies would offer the best iron ore exposure in WA? CZR, market cap $70 million. Large development ready resource net infrastructure in the Pilbara subject to sale. BCK, market cap 230, large development ready resource net infrastructure in the Pilbara and several large high-grade resources in JV with Min. RHK, market cap 174 million, large high-grade resource net infrastructure in the Pilbara at PFS stage. M4M, which is macro metals. Pro forma market cap 136 million, scattered holding of early stage exploration properties, mostly under application.
Should have italicised that one, maybe, Chuck. Can you italicise in Twitter? No, you can't. Can you?
No, you can bold though if you pay premium, yeah.
Oh, there you go.
There you go.
You're paying for premium.
Well done,
Trev.
Trev. That was great. We'll give you a breather now. Matty, you jump up. You've got
I just made a segment out of nothing.
uranium. It's near and dear to your heart.
Uranium, but she's like, it's interesting at the moment. It's tracking along. You talk to all the wigs in the know, like the thesis hasn't changed by the sounds, but it's just probably going through a bit of a consolidation phase, So, and interesting stuff happening in the physical trusts. So, the 2 main ones. Oh, ding, ding, ding! I own some SPUT, and I do own a Uranium Explorer, so I have a vested interest. But in regards to the physical ones, the 2 main ones that we talk about, the Sprott Physical Uranium Trust and Yellowcake. Yellowcake's in bloody listed on LSE, so it's Yellowcake PLC. So Spud holds £65.5 million. Yellowcake holds £20 million. So Yellowcake. So when we talk about NAV, is like what these things are trading at in relation to the how many pounds they hold times the bloody spot price at the time. So it's either a premium or a discount to NAV. So similar to a listed investment company, how when you talk about their trading to NTA. So Yellowcake for the last 2 years, I'll bring up the chart here. It's traditionally traded like well below NAV, like discount of 9%, as low as 25%. Currently sitting at about 10% discount to NAV at today's U price of 87.50. So, and like to give you talk, and when we talk about the spot price and the spot market, the spot price went down $2 last night. And that was based on an order of £100,000 and £0 were even traded. Like it is that thinly traded, and you would say not irrelevant, but just minimal in its role in the uranium market compared to the term pricing market. So, and Yellowcake, they recently took delivery of £1.5 million from Kazatomprom under their 2023 option agreement. So that was done at a price of $65.50. But that's I think they can get some off them each year or something by the sounds. So now Sput, so they're trading about a 10% discount. Sput, so they've grown. Sprott have grown it from £18 million up to 65.5 since 2021. So they bought a lot of pounds. So they were buying a heap in April, May, 1.75 million pounds they bought. And how Sput buys uranium is when it trades above NAV as a premium. And when it is trading above NAV, they then essentially issue new shares. And with that money, they buy uranium pounds to bring themselves back to NAV. So whenever they're trading the premium, that's the only time they'll be buying it. So I'll bring up the Sput chart here. You can see Sput was trading at around NAV and premium, and then they were buying in April and May, and obviously went above NAV numerous times to purchase the pounds. But in the recent weeks, Sput's discount to NAV has now gone down to 11%, it's really just boom. Spot price hasn't moved too much, but their discount to NAV is like at the same level as Yellowcake at the moment, even though the spot price is holding 87 to 89. So,
why is that, Matty?
European summer. Apparently, historically, European summer, not too like Northern Hemisphere summer, not too good for uranium prices. I don't know, they don't need as much energy or something. So that's one thing. Historically, uranium has underperformed a bit going into Northern Hemisphere summer, which we've just hit. So
seasonality in pricing.
Seasonality in pricing. That was one of the reasons. But waiting on information too. I'll get to that. So, and I guess with this, how this spot market works is that from what I've been told, you see it reported by UXC, Trade Tech, Numerco, but the utilities don't really have to report anything to these organisations of what they're buying and selling. It's all just it seems pretty opaque because word on the decline is that I guess the term contracting market, which is the big market for buying and selling uranium pounds, it's like bloody busy, like the busiest it's ever been, one trader said. So there was this fuel buyers conference in Atlanta this week, which was like the big talk from all the U-Bulls, like, we'll be looking forward to this conference. It's going to get everyone in the building. They'll all be talking about it and something will happen. But it actually didn't really do anything. The uranium sort of, spot kept declining. No, it didn't really have any positive effect on the market. But the big thing, I guess, everyone's got in the calendar is August 8th, and that's when Kazatomprom's numbers come out. So, and we didn't really cover them until the sulfuric acid issue. But before that, September last year, Kazatomprom announced that they were going to return to 100% subsoil use levels in 2025, and this was going to lift the uranium output by 6,000 kilograms of U. So to convert kilograms of U, they write TU, but 6,000 means 6,000 kilograms of U. To convert that into pounds of U3O8, you multiply it by 2.6, not 2.2, normal pound to kilo. It's 2.6 for U into U3O8 pounds. So they were predicting 2025, back then, before the sulfuric acid issue, that they were going to produce, guided for 31,000 kilograms of U, which is 80.6 million pounds, coming out of Kazatomprom on a 100% basis. But then came the sulfuric acid supply issue, and whether it was all just sulfuric acid and there was some mining difficulties that were reached. They weren't leaching as much as they thought. They then cut their 2024 guidance by 14%. So they went from 65 back to 56.5. So I guess everything changed so quick from what they were actually saying 2025 was going to look like. So big anticipation for these 2025 numbers out of Kazatomprom, and beyond that, what the actual 2025 production will be in a year's time. So looking far down the road there, but and the big drive is trying to get their construction of that on-site sulfuric acid plant done, which I think they guided for 2 years or so. Everyone thinks that's not realistic to actually achieve that. And the next thing that the U-Dogs have been telling me, September 4th to 6th in London is the World Nuclear Association Symposium called, though you hear them refer to WNA. So pretty much all the global bigwigs in the building talking about bloody tripling global nuclear capacity, uranium and fuel supply, bloody
Matty,
all the new countries and everything. So I should go to that.
You should. You'd have a blast there, mate. I know you do well at conferences. You made the comment as well that the fuel buyers met in Atlanta, I think, last week, and there wasn't a positive effect on the market, but it's not really in there. Would they call it a positive effect if the uranium price went up?
Oh,
They want cheaper pounds.
yeah, don't know. Like everyone was, you heard all the commentary. Oh, the Atlanta meeting this week, we're going to, there'll be some, I think it's like they think that if you get everyone in a room, there's just going to be this positive vibe and buying and like just all flow.
Yeah, I fill my garage up with a couple drums of uranium.
Get this fucking train running. Like, and it just, whether that happens or not.
I think in bull markets, like everyone sort of looks at the calendar and is like, what's the next catalyst? Because we just need a series of catalysts. And it's like, the reality of commodity markets is there's supply and demand balance, and price is determined by where supply meets demand. And a conference actually doesn't really impact supply and demand, but it's a date on the calendar. So let's look and point to that.
I think by the sounds, this WNA is like when they're talking about tripling global nuclear capacity, be like, all the countries will be, discussing what their future plans are and say, we're going to start lifting our capacity from this to this.
Yeah.
Like that could potentially be a catalyst.
If there's outcomes,
Yeah. So, but hey, it doesn't. God, if Casadonprom's going down in uranium and NextGen's going to be piss farting around till 2030, like it's just so interesting. And I still go back to my thought of after the Mike Olkin chat and continually looking at how this imbalance in this structural supply deficit, I still can't get my head around why the utilities will commit to building these facilities if there's such a risk of getting the actual uranium, not just the uranium out of the ground's the one thing, but the conversion and the enrichment. So, mate, I'll be watching this for years. It's just so interesting. Bloody fascinates me. So,
awesome.
A lot of wheels in motion in the world of uranium mining. Fuck, if uranium mining takes off, Jesus Christ, Brooks Equipment, they're going to have their ring hanging out. Imagine the yellow gear they're going to have to supply to try and meet this so-called structural supply deficit.
The yellow cake needs yellow gear, and Brooks has a yellow logo. So it kind of just all makes sense.
Mate, and you need yellow planes to fly people to the places to hop in the yellow gear to mine the yellow cake. Like, fucking, Brooks are probably going to have to go international.
I feel like Brooks Airways might be the first, nuclear aircraft.
Yep.
Yeah.
Don't you think
pretty much like those submarines?
Yeah.
It'd be the Brooks plane. Yeah.
I think
if it fucking blows up there, who cares? It's up in that'll all dissipate pretty quickly.
No, with the Brooks name on the plane.
Yeah, it's checked by the Brooks. It's checked by the Brooks, and there's going to be no nuclear meltdown or anything. I can bloody fucking guarantee that.
I think it's going to look, pretty timely. The deal they've done with the Chinese group to get all the new kit all around Australia. I mean, it's the stars are aligning for this uranium mining to take off here, and Brooks just to be the provider across the whole country.
Yeah, no, because I was talking to someone from the Brooks team, and they were just saying how much they're keenly awaiting these Kazatomprom numbers the guidance of WNA, because they holy snap and duck shit. If there's any sort of indication that that's got to ramp up, they're just going to be. They're going to have a lot of gear going out the door. So strap yourself in, Brooks. Yeah, there we go, boys.
I've got just a broader question.
You got any questions that I won't be able to answer?
Probably. And that's there's a lot of people looking at the uranium market now, right? Like heaps and heaps and heaps. And a lot of people are very embedded in their analysis. So they're like, I've got intel from this hedge fund, this hedge fund, this hedge fund, and I've got intel on the inside of Cameco and blah, blah, blah. And because you've got all of these people who are so kind of focused on it for the same reasons, it interests you, the supply and demand imbalance, right? Do you think it's like that Cameco's announcements and dates, that the information there will actually be, people will know about it ahead of time and trade on it ahead of time, and by the time it comes to market, it's kind of priced in? Like, or do you think there's such thing as being able to keep that stuff a secret, given how many people are so closely focused on it?
Yeah, don't know. It's like that happens everywhere, wouldn't you think? Would you think that happens everywhere?
Yeah.
It's like I suppose it'd be like calling a MD of a gold company, say, have you had a good quarter or not?
Yeah, I guess the point is like these are numbers where everyone's like waiting for this number, right? And almost as if it's like the decision of the Fed, where it's kept in a closed box and no one knows until it's out, sort of thing.
Yeah, no, and to be honest, I don't think the numbers the number just gets offset by whatever they say, and we've seen that like with what Cameco and Kazatomprom have said. Like they can have a shit number and just say, nah, we're forecasting this and fucking all good, and just keep rolling. And it's just like you talk to
kicking the can down the road.
And I suppose if any bloody money miners listening, like the psychological side of this, just because research something and start going really in the weeds and know a lot about a topic, not saying I know a lot, but I've put a lot of time into it, doesn't mean it's going up. Like just because you really know heaps about it doesn't mean you got to be cautious of trying to validate yourself to validate the investment. So, geez, words of wisdom.
Behavioural bias is what I also said towards it. Sometimes we look for confirmation bias, for confirmation and validation rather than trying
words
to
of a seasoned punter.
Oh, mate, just haven't I grown since my AFR article about CFD
leaps and
trading?
bounds, mate. Leaps and bounds.
Yeah. So, it's just going to be one of those. I hopped on bloody. I even got on a Twitter space this morning, Trav.
Yeah.
Were you proud of me?
I was. I was.
I was like, because one guy started talking about the Australian government and like their bloody what's going on over here. But yeah, it's just fucking. There's so just in Australia alone, there is so much to play out between fucking who's gonna the bloody dick measuring contest effectively, between bloody renewables, hydrogen, and nuclear and bloody coal, and probably would need every single bloody one of them to do everything. So, yeah. Oh, mate, I'm not going anywhere. I'm not leaving. Money of mine until I see a bloody outcome on energy transition, which could be 20 years down the road. So I'm locked in forever.
You're a man of the people.
Speaking of riveting commodities, mate, mineral sands.
It's been too long. It has been too long.
Talk about bloody.
This section JD wrote about a week ago.
An erectile accelerator, mineral sands.
Do you want to skip it again and just go straight to the?
I'll fly through it, gents. It is interesting, and it's been a tough couple of days for the company we're going to talk about, Sheffield. So from Wednesday last week till Monday this week, down 8%, 12%, 6%, 12%. Now that's obviously compounding on the way down. So it's been a torrid couple of days for the company. Also doesn't really point to an efficient market. The sort of people slowly getting to grips with it, but from 50 cents down to 34 cents last time I looked. And they do fly under the radar quite a bit. They constructed the Thunderbird Mineral Sands project up in the beautiful Kimberley, a project that was a 50-50 JV with Yan Steel. And Trav, you said this last week when we were chatting about it. A lot of people just didn't think for ages the project would get funded.
Nah, it just had such an undemanding market cap, this company. It was like, and the CapEx was in that, like, was it like 400, 500 million? It was a big chunky CapEx. I can't remember.
Yeah, I think it was a smidge below 400. Off.
And you just looked at Sheffield and you thought there's no way this company can ever fund that big a CapEx, but they've figured out a way to do it by doing this JV and, there was minimal equity investment. NAIF came in, but it was a funky kind of structure. And I think they even got the fixed price EPC contract with GRES, which they never do, to sort of lock it all in. But unfortunately, even all that hasn't ensured a positive outcome because they've come into a bit of trouble now.
Well, it was phenomenal. There was pretty minimal equity dilution along the way. Obviously, they sold a good chunk. They had Yan Steel come in and buy a portion, 10% of the company at a big premium. So, yeah, they got there doing very minimal raising. Even when they did launch a raising in Feb of last year, they wanted $30 and they only got 23 odd. So, did do a bit in debt with Orion, US 110, and NAIF, like you said, another 160 Aussie. So, NAIF being our taxpayer money. And they just, had their heads down and they got the project delivered, constructed, on time, on budget. It did pretty well. It's a big project, 10.4 million tonnes per annum to produce zircon and ilmenite. And as is a bit of a theme that we've been speaking about lately, gents, ramp up is not easy. And they are they're struggling a bit lately. So they've been in ramp up for a bit over half a year now, and it doesn't help the company when the nearest peer is Strandline, who hasn't traded since October. They're in a world of hurt. I wouldn't have high hopes if I was an equity holder in Strandline. So it kind of brings us to the first bit of real negative news, which came out on Wednesday, I believe, of last week. So to sum up the announcement, fellas, it's not great. They're getting the tons through the mill, but 750,000 tons in May alone. That's in line with the ramp up schedule. It's deposited over a thick sheet like all these mineral sands projects are, and then it's a continuous process of rehabbing while mining concurrently. The problem they're having is oversized ore, and it's continuing to come in volumes which are way over what they expected, which means what's being like only 3/4 of what's expected to go to the spiral feed is actually getting delivered into the wet concentrator plant. We'll flick up the flow sheet now so you can kind of see it. So the wet concentrator plant is operating fine. It's just not getting the material, which obviously means you're not getting the right amount of end product at the end, which means cash is a problem at the end of the day. And they've also actually slipped in a couple other challenges which they've had, and I'll give them the benefit of the doubt. They've talked about wider inflationary cost pressures, which haven't really gone away over the last 3 or so years, plus logistical challenges. But all of this, to your point, Trav, earlier, isn't helping alleviate any of the concerns that people had around the project just being really tough and what led to it not being funded for so long.
Yeah, I can't speak for the quality of the project, but it was just like Sheffield had this tiny market cap because who was really funding, mineral sands projects unless you were Iluka or whatever. But another fascinating takeaway about this is the share price has come off, and the read through is maybe they need a bit of an equity injection for a working capital thing. But what's the visibility on all that sort of stuff? But you mentioning NAIF just sort of like I had to check, and NAIF's in on Strandline as well, so that's distressed. Don't know, are they going to get 100 cents on the dollar back from that? Don't know. Then you've got Callium is being sold for scrap fucking metal at the moment, and NAIF, that was a NAIF funded as well. NAIF, I'm pretty sure NAIF's doing BCI. So, I mean, there's a lot of taxpayer money going into projects which get distressed, and they're overburdened by too much leverage, and they're also got real technical challenges, and it's like in all of those cases, definitely in Callium Lakes, like just torch taxpayer money. The rest look complicated in some way, shape, or form.
The sort of style of NAIF and government spending more generally perhaps could use a bit of a rethink in whether these picking winners in quotation marks is the way to go, or
God, if you can't make it work with the NAIF money, far out. God luck. Imagine if they didn't have it. Far out.
Yeah, and NAIF, the good thing about having NAIF in the cap structure is they'll be kind of, let's say you get distressed, right? They'll be flexible with your repayments. They'll restructure, and they'll want you to succeed in the long run. But I think in all of the cases, NAIF is only one of the lenders. Then they'll chuck in a different type of lender on top of it, which might be a bit more predatory and have more onerous sort of covenants and is less flexible, and they fucking need returns for their investors. So it's just a different dynamic but maybe NAIF should just be fucking building roads, like unlocking things as opposed to trying to, build kind of marginal projects that just flop.
Infrastructure,
So MinRes is sorting that out.
Just to summarise on Sheffield, they got about $20 million in the bank at the parent company level as of the latest reporting, capped at $135 million. The JV called KMS had cash reserves of $21 million plus an undrawn $6 million cost overrun facility. Bearing in mind this is 2 months ago now, so that'll likely have moved backwards. Throw in the fact that zircon prices haven't been so friendly of late, and it's looking pretty tough out there, and we'll see what sort of solution they come to. Unfortunately, I wouldn't be surprised if they have to raise a bit of cash in the near term, but let's hope that they can, solve this challenge. They're not generally solved so quickly, but we'll see.
Yeah, and it's not many mines right now, Broome. It'll be a. Yeah, hopefully it bloody finds a way through.
Yeah.
Hope Strandline does too in the long run, but the cap structure needs to change.
Yeah,
Rezo in Broome, how good would that be?
Yeah,
Bloody.
Yeah, mate. Go to Matzo's at the end of the shift.
Yeah. Go suck a few ginger. No, how good a freezing cold bloody ginger beer be after a hard day's work?
Yeah.
For a hard-earned thirst needs a good cold beer, and the best cold beer is Matzo's ginger beer. It doesn't roll and it doesn't go.
JD, you looked at a giant mining IPO.
Not a mining,
what is it?
aluminium producing.
A giant aluminium producing IPO that has fallen over.
I don't know. I don't know why I did it, gents. So sort of suffer through this with me.
If it interests you, JD, it interests me.
You know what I found really interesting about this one, Matty? This is a company called Novelis, which you will know a bit about the parent group, Aditya Birla.
Friends of the show.
Friends of the show. But what was particularly fascinating about this one, gents, is that no one's talking about it. There was one Bloomberg article. These guys were after about $1 billion in an IPO, and it's just fallen over. And after you do the roadshow, you speak with investors, you do a heap of work. They don't just fall over for no reason. There's got to be some questions asked and answered here. So Novelis, they're Atlanta-based, Indian-backed, an aluminium product producer. They're the world's largest aluminium recycler. They were planning to sell roughly 8% of the company, valuing them at a bit under US $13 billion at the top of the range. So the rest of the company is owned by Hindalco, which is the metals arm of Aditya Birla. As you know, Matty, they're the formerly proud owners of Nifty.
Very proud.
Yeah. So they bought Novelis in 2007 for US $6 billion. This is a company that had, in the most recent full year, US $600 million in net income. So that was down roughly 10% year on year. Free cash flow of negative $75 million. Total debt of US $5.7 billion with 1.3 in cash. And they were guiding to $2 billion in capex in FY25. So it's a truly industrial business that has high input costs. They're suffering from high energy costs, labour that sort of unionising risks, freight costs were tough.
Nasty.
So it's a tough business, and they were trying to get it away at an EV to EBITDA multiple of a bit over 8 times. And
Mate, you said that that they bought it in 2007. So that's the same year Rio bought Alcan for $44 billion. So it just must have been like aluminium bloody M&A frenzy at that point in time.
They bought it at the wrong time, yeah. So
10 o'clock, JD.
Yeah, very good, Matty. I think you're right. And to answer the question of the obvious question that comes up, why would you ditch a listing at the last minute? I mean, there was an article 2 or 3 days ago saying it's gone ahead, it's all good, and then a day later you see, it's not happening anymore. And the company said, market conditions aren't good, and they'll continue to evaluate the timing of the offer. That is it. That is all they said. So that just screams out to me, we couldn't get the cash. And why else would you do it? Like I sort of said, these things are a tremendous amount of effort to get going. You're paying a lot in fees. Obviously, a lot is a success fee, but you're still paying a fair bit to get all these professional services groups to help you out.
The read-through is the investor appetite at the valuation we wanted was not there.
100%. And I think there could also be a negative read-through on the broader macro environment. Aluminium, similar to copper, follows the global GDP cycle. We're talking about packaging, cans essentially, cars, specialty materials, space parts. I mean, 80% of the business is essentially cans and car parts.
Oh, bloody, I contributed it, lifted it last night, sucking about 10 dingoes down.
Doing God's work, mate. You're doing God's work. So
Roscoe that was saying that, the Alcoa and Freeport are just like hyper correlated stocks as well. It's just,
and
I found that fascinating.
And the substitution effect.
Yeah, so it's like if you own one of them, you kind of got exposure
to the other. Yeah, really, really interesting, I thought. So there is perhaps a read that fundies are a bit standoffish on global growth, on this whole notion that we're going to have a super soft landing and everything's going to be tickety-boo for a while to come. But yeah, just at the end of the day, fellas, I'm pretty surprised that more hasn't been made of this. This was going to be one of the biggest IPOs in the US, not just mining, industrial, whatever, like one of the biggest IPOs of the year in the States. And a surprisingly little amount has been written about it. So at least we're speaking about on Money of Mine.
Yeah, right. Bloody
Trav, bung ASIC back into line for us, please. Sort them out.
I just think it's worth having a bit of a chat between us about. So apparently ASIC has put the market on notice for the deal leak of a capital raise out of Novonix. So yesterday at 12:15 p.m. there was this Street Talk broke this story. They say that City has been City's wall-crossed investors for a Novonix capital raise. The trouble is the stock wasn't in a trading halt yet. If you look at the Fin's title now, it says stock in trading halt. So, anyway, it was definitely still trading when it was first broken by Street Talk. And guess what? The stock sold down 10% once that leaked, because obviously an equity raise is done at a discount to the last price. So it's, sold off or being shorted in anticipation of that for a risk-free return by hedges or existing shareholders or whatever. And I'll just even play the Spark replay from when the story goes up on AFR. You can see there, just like right towards the tail end of the day, bang, 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 bang. So it's fascinating. That late trade midday. Look at the volume, right? Trading on an information leak that never should have happened while the stock was in trading hold. I just think this stuff's just an absolute piss take. It takes a mockery of the markets that we participate in and observe. Surprisingly, ASIC has actually piped up for once and put this. Put the market on notice, whatever that means. I can't find a media release from ASIC, but I'm just referring to an article from Capital Brief for that reference. And I just think it's a worthy opportunity to have a discussion about deal leaks broadly, because this happens all the time. We covered it in depth not that long ago when talking about Karoon's capital raising last year to buy Whodat. What do you guys think of this stuff?
The technical term is a fucking joke.
Deal leaks are you would say the alpha of the people leaking it. I don't know if alpha's the word, but it's a lever they pull to help them get an outcome.
Should be bloody criminal.
Yeah. It's kind of fucked up how much it happens, if you know what I mean. Like there's Street Talk and Data Room will often be the recipients of deal leaks, be it a capital raise or an M&A transaction or rumours and all that sort of stuff. And the leaker uses the opportunity to provide that information because they're getting something out of it. And information is currency in media as well. So there are certain people in the industry who have a reputation for being habitual leakers, because that's building currency with the publications, which then they might get some positive press in return for it. There's just a sick dependence on this kind of stuff in our capital markets, and I think it's to the detriment of the retail investors.
And we should be clear again, in this case, we don't know who leaked it. There are so many different parties that are incentivized slightly differently depending on what side of the aisle they kind of sit to, like you say, Trav, leak this and get the ultimate rewards, whatever that may be, through building trust with someone or whatever. Financial kind of, as you allude to, Matty, would be very, very criminal, but it just shouldn't happen, and it will just continue to happen if nothing happens about it. If ASIC doesn't do anything, it's just going to continue to happen.
Yeah, but isn't the retail investor never gets thought about, because you think of, right, the person leaking the deal wants to get the deal done because that's how they get paid. The newspaper
not necessarily. It's not always an advisor that leaks it. It's a fund that leaks it.
Yeah.
They're either getting an appreciation. They're going to get an appreciation in it, or it's a currency.
There's a financial incentive to do it.
Yeah. And then the newspapers will always take the leaks and everything because that's their stories. And what benefits the retail investor doesn't really benefit any of them, and that's why they're the victim of it.
I agree. I don't think it's just retail investors, though. To be clear, not all funds are a part of this type of behaviour, and a fund that is a holder in Novonix, just like a fund that was a holder in Karoon last year, that has nothing to do with this sort of behaviour, they cop the brunt of it.
Yeah.
They are part of a company that is then raising at a much lower than expected price, and they are diluted out of future earnings because of what's happened here.
To be like, a very fucking logical first step for some of this stuff is, if you're a Street Talk or Data Room reporter and you get leaked a cap raise fucking thing from a fund manager or whatever, wait until the end of fucking trade before you post that story. I know you want to be the first and blah, 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 I get that, but just don't fucking leak that fundies are being crossed on a stock that's still live trading. That's just a fucking no-brainer, I would have thought, but yeah.
Yeah. Check if they're in trading halt first.
Anyway.
ASIC, do your job. That's it. All right, fellas, there's a bit of a somber note to end it on.
Should be right. Yeah, well, you know how I feel better about myself? I'll mention the bloody partners.
That's it.
That always bloody perks me up. Who'd we have in the show, JD?
In the show, we had the one and only GetWet Solutions.
Oh, yeah, the map scatter. Love it. Get hold of Matty.hall. His mobile number's in the show notes.
And we also had Brooks Airways, Brooks Hire, everything Brooks.
Was that this one or the last one? Yeah, it was. Yeah, because they're sorting out the global uranium mines.
They are, mate. Doing
That's
God's
them.
work.
Bloody you do. So I'll be supporting a few of the underground ones, guaranteed. Silverstone will be powering a few up. CRE, they'll just insure the lot of them. WA water bores, mate, he can drill for uranium and water. Bloody paleo channels, he's all over it.
VRIFY just making investors' lives easier.
Yeah, it's just a piece of piss. And then bloody K-drill. Jeez, what more do you want to know? And mate, courtesy of bloody that great animation you provided, Trav, was from Spark.
Hooroo.
You could do it yourself if you want.
Hooroo,
Get
money
Spark.
miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.